Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Monday, November 25th, 2024. So today was not an easy day, believe it or not. We had our signal weight and our cycle momentum. Well, the signal weight was really, really high, so really bullish, let's say. And the cycle momentum was actually negative, and that happens with it, but that's really what was causing the up and down movements today. But I put in the morning notes, I said the bearish wedge pattern that I was showing on Friday has been dissolved and no longer in play. Um, but what may be in play is the gap to new all-time highs trade. It's worked 100% of the time. Doesn't mean that it has to work this time, but shorting close to the open and using today's gap as the target has been a fantastic trade. Let's go to it. Here's your gap open. This is within the first 20 minutes of trading. I think it was actually in 10 minutes. Let me see. So we have first 10 minutes of trading. Made the high. From there, came down, closed the gap. So that trade remains 100%. I didn't take it. So I made my day difficult. And really, the main reason was because the way that the signal weight was pointing that this could have been a little bit of a dangerous trade to fade this. And sure enough, it came down, and I started selling put premium, and I used the 59.65, 59.55, and I was really kind of anticipating that the gap here was going to hold. And then it came through that, and it hit the moving average here, which was a little bit lower than that. I think we went to 59.65. So right around where our number was. I was saying that you could be adding to the position here, and from there it ended up working out, but I got stopped out on it. I just when I'm managing the fund, even though it's that these expire today, with the number of contracts that I trade, I can't. Once we start breaking support levels, I kind of have to bail on it because I can't have a $20,000 loss. It just doesn't work that way. So I got stopped out. It was an $1,800 loss, and decided to buy some calls when we were at this gap area, as well as the moving average. That ended up working out just to make up our losses, and we made 175 for today. 150, 124, 123 is in the account. So we're up still at 51% on it. But it really was not an easy day overall, because it really, with the signal weight, we should have kind of found support right here and then headed back up. But once we kept going, and it was really the NASDAQ that was pulling everything down. And what you need to notice is with the rotation that's going in, where you're seeing the small caps in the Dow outperform the S&P and the Nasdaq by a wide, wide margin. And eventually that's going to change, and then you're going to see money rotating into the S&P and the Nasdaq. But right now they're taking a break, and every time they're trying to gap something up or go, it's getting sold. So they're having a little bit of a hard time, but you have the Dow and the Russell that are just plowing through things. So we have a little bit of a mixed market, and that makes setups a little bit difficult too overall. But like I said, today it didn't really go with what I thought was going to happen. Just because I really thought support was going to hold and we come up and at least test these highs again, and that just did not happen. Glad I took the trade here instead of just giving up, because it worked out and it ended up helping out the account at the end of the day, even though it was pretty much just a break even day. But it's better than losing 1,800. So here's our lines in the sand. If the bulls can get above, pretty much, if we open higher tomorrow, I would anticipate that we're going to come back to this support right here. This is actually going to be some support, the resistance, and that's right at the 6,009 level. And if it gets above it, then we'll come up and be testing the 60/20. Now, if the bears lose this support zone right here, and I could even bring this down some here, I was just really showing the gap. So if they lose this support zone, you can pretty much be assured that we're going to be heading somewhere down into the 59.41 level. But if we look at the 60-minute chart here, I mean, it's not really an ideal, say, setup for a divergence because here you can see we actually, yeah, we did kind of make a little. You know what? I'm not even going to count it. Put it this way: they burned off a little bit of the overbought levels right there. So this remains the important support. So I thought there was some divergences, but this is barely even a new high. It's by 3 points. So I'm not counting that. I'm not even gonna really pay attention. But we're kind of neutral with momentum. 15-minute chart, no bullish divergences, no bearish divergences. Arun just went into a sell signal, and we were actually in a buy signal all the way until here with the trend indicator, and then we turned south here, and you can see it's just where things were just kind of chopping all over the place. There was no consistent trend where you see the same colors going. It was it was very choppy, probably to say the least on it. So what was actually the best way to trade today was really just using the 5-minute chart, and once this got the sell signal right here, I mean, you had an easy trade all the way down, almost a 30-point trade. Really, the easiest trade was the gap open to new highs. But in any case, um, here we are. We gotta, let's wait and see what plays out tomorrow. I'm still open-minded because I know that volume is pretty much going to dry up at the end of the day tomorrow or some point, or at least the big boys are going to, they're going to go to the Hamptons or wherever they go for Thanksgiving, take Wednesday and Friday off, and it's really going to be the kids that are running the show. So it's really hard to predict exactly what would or will and won't take place. But I'm open minded on it. If the thing is this is that if this was a wave A and now we're making an A B C B, then really what we should see, and I think if this gets does not work out like with these numbers, well, you can see actually right here, the 78% retracement right here is really right at the 608, and that would be, let's see what the extensions are. Hang on one second. Okay, so the extensions that I'm looking at is just from this A, B, and if it's going to follow the same distance, we would expect anywhere from the 6,002 and maybe it goes up to the 23%, which is the 123%, which is 6,007. And if we go to the 15-minute chart and hang on, let me get that off. And we just look at where it is, you can see that this 6,006 area is the 78% retracement. So that pretty much matches right up. And this would be the resistance area. And if that's the case, then what will happen is this will be an A, this will be an A, B, C, and then we have the wave. Then that's the wave B, and then we have the final wave C down, and that would actually be looking for it would actually be a pretty decent little drop because if I was just going to do those extensions, so we know where the numbers are. So now let's just say that we're going to okay. Let's just say that this is going to be the top on it, and we want to just measure it with some extensions to find out some possible target zones. What we would be looking at is this would be our A. This would be our B. Hang on one second. All right, let's try that again. All right, this would be our A. This would be our B. And okay, sorry. And then our wave C would be looking to come somewhere down into that 59.45 level, 59.50. But that's, you can see this is the moving average maybe coming up there. So I think really the best way to do this is really just stay open minded right now because like I said, I'm not really seeing any buy or sell signals, and we could just be doing this extension part where we're going up and down, just making a little zigzag. So let's see what plays out tomorrow. Enjoy the rest of your night, and I'll talk to you guys in the morning.